La neta con Larry Navarrete.
Welcome to the bottom line with Larry Navarrete. This is episode 4. Welcome to the summer.
Thank you. Once again, this is Larry Navarrete with the bottom line with Larry. Welcome to the heat.
Yeah.
Notice the heat.
Summertime.
My wife was telling me, why are you sweating so much? And I'm like, well, she goes, it's not that hot. I'm like, well, it's not that hot when you're inside the house, the AC. The moment you do anything outside and you start mowing that lawn or just anything that'll take you 30 seconds.
Well, that's why I don't go to the gym.
Yeah, I start sweating.
Yeah, forget that. But there's 2 reasons why you go to the gym.
I don't know.
Either
You
to
see,
lose weight
I'm down 12 pounds, so I've been going to the gym.
So, Larry, we're here on episode 4. We're going to talk about a little bit about credit. We've been talking about the home buying process. We've been talking about who Larry is. Let's talk about a big concern for people.
Credit. Credit is a big issue. It's a big factor when it comes to home buying. You know, a lot of people tell me, or a lot of people think they have to have perfect credit. No, you don't have to have perfect credit. You do have to have credit, right? And you got to have some established credit. You got to have decent credit or good credit. And people ask me, well, what's a good credit? What's a good credit score?
Yeah, what is a good credit score?
I'll tell you, a good credit score is whatever you need or have to buy that home.
Okay. So basically what he's saying now, it depends on...
It just depends on the loan. Conventional loans are more geared towards a higher FICO score.
Okay.
Your government loans, which is your FHA, VA, USDA loans, those are more geared. Once you have the minimum FICO score, you're good.
What is the minimum score that you...
580 is the minimum FICO score. I personally don't like to do a lot of 580s.
Okay.
And, I always tell the person or the borrowers, let's get you to 620. Let's get you in a program. It might only take you a couple weeks. Like right now, I have a borrower, just 10 minutes before I got here.
Okay.
I ran his credit, 623. He qualified, 620 and above, good. But he has 2 small credit cards. $500 in limit on both of them. And he owes on one $498 and the other one $522. Guess what happens if he pays down $200 on each one? His credit's going to go up by 20, 30 points.
Because he's going to owe less...
On the percentage of the balance.
The percentage, okay.
It's not what you owe, it's the percentage. And I'll get more into it right now. All right? But yeah, it's the percentage of what you owe.
Yeah, so it's better to be at, below 50%?
Ideally, you want to be below 10%.
Oh, okay.
And then 30% is the next mark. And then 60%. Once you go over 70%, your credit starts getting lower. And remember, it's a lot of people think, oh, I owe a lot of money. You know what? We only look at what is the monthly payment. So if you have a $10,000 credit card and you owe $9,000, but if your payment is $90, we only look at the $90 debt.
So the percentage on that doesn't matter?
Yeah, well, the percentage matters, but the actual payment to qualify for a home is $90.
Okay.
That's what's going to count against you. Now, that's your debt to income ratio. If we're talking strictly credit score, yes. Let me give you an example. Somebody has a $10,000 credit card, and they owe $3,000.
Okay.
Right?
30%, right?
30%. Let's say somebody owes a $500 credit card, has a $500 credit card, and they owe $490.
Well, they're
maxed out. Even though that person that owes $3,000 owes way more than that $490 person, their credit's going to be a lot better because percentage-wise, they're only at 30%.
So basically what you're looking at is the overall percentage?
The overall percentage of available credit.
Okay.
Towards your available credit towards that max credit. So that's what the credit cards the companies look, and that's what gets your credit score up and down. So your credit score could fluctuate from 1 month to another 30 or 40 points. And people are like, how? I didn't do nothing. I made my payment. Yes, but you had that $3,000 credit card, and you were at $900 per month, right? $900 balance, which was right at 30%. And let's say you bought something for $1,000, now you're at $1,900. It got you over that 50,
over
60%.
That.
And that's what made it.
So what you got to look at is percentage-wise. And that's a good way to get your credit
score. Yeah.
Now, let's talk about a little bit about people that have no credit or they're barely going to establish
when
credit.
When people have no credit, there's a couple options. And it's not sad to say it. I started, right? I always tell people, I always recommend jewelry store.
Jewelry store, okay.
Why? Because their interest rates are like 25%. And their profit margin is 800%. Don't go out and buy yourself a $1,500 chain. Do you have a $1,500 chain?
No, not
Okay.
today.
All right. I thought you did. I thought I seen you
Yeah,
before.
I'm not wearing it today.
So
Times are hard.
Get yourself a $200 watch. They're probably going to ask you for $100 down, and then you finance $100.
Okay, and that'll help you build
That'll
credit.
definitely credit. Jewelry stores, high profit margin, easy to get credit cards, easy to get their credit. It's a revolving credit. It's not a closed-end credit. A lot of people at the dealership tell you, "Oh, buy a car to help you grow credit." Yes, but remember, it's a closed-end credit. Closed-end means when you pay a certain amount every month, it's a fixed payment. Once you're done paying it, it doesn't stay open. You have to reapply.
Reapply for a new car loan
New
or
car
whatever.
loan, yes.
Yeah.
On open-end credit is your department stores, your jewelry stores, your credit cards, your tire shops, where you buy, tires. So, for example, if I have a $4,000 limit at Discount Tires, I pay it and it's still there.
Yeah.
As long as if I don't go buy new tires,
It's
I don't have
sitting
a payment,
open.
but it's just staying open.
Yeah.
That's an open-end credit. Same thing with the jewelry store and everything. It's an open-end credit. That's going to actually get you more points than an actual car. Even though you pay $30,000 for a car, that $1,000 open credit is actually, because that's
going to help you.
It's going to help you more because it's telling the credit companies, how do I manage my credit?
You talked prior about how maybe kids at a younger age they should,
Yes, my daughters, one's 20 and the other one's 18, and I think I don't know, I haven't checked their credit, but I think they're probably both 700 or better, or 800. Why? Because I got them a student loan credit card, and then I added them to one of my credit cards. And I added them to the one where I have one of the higher limits, and I owe less money, so I could get them, so they could get more credit.
So previously, I know we did this episode on Spanish. You talked about how your credit score is actually going to help your kid out.
So it's not my credit score, my credit history on my card. So when I added them, let's say I added them to one of my bank cards, and I've had that one for 10 years, right? And I have a $10,000 limit, I only owe $500. That's going to jump to them. So it's going to show like they've had a 10-year credit history when they've actually only had it for 3 or 4 months.
Yeah.
But because they can't, the credit companies or the credit bureaus can't split. Okay, this account's been here for 10 years, but you only got it added on 3 months ago.
So that's a good way to start your
Yes.
kids off
Yeah,
on
kids,
credit.
start them off, yes.
Starting off and keep an eye on them.
There's another secured credit cards. There's a couple local banks that do secured credit cards. Secured credit card is you go deposit $500 or an X amount, and that's what your credit is. That's what your credit is, $500.
Because you put that money in there.
You put that money, so that money's put in the savings account. Now, people think, they'll get the payment from there. No, you still have to make your regular payment. After a certain amount of time, usually a year, they will review your credit, and they'll give you the refund of the $500, and your credit gets increased. That's
It
how
might go to $1,000.
It might go to $1,000.
But you get your $500
That's how I
back.
started about 20-something years ago.
Okay.
Yeah.
So it's a good way to start off.
It's a good way to start off.
You can go to a local bank and see if they have it available.
Yeah, to see if they have it. But it's
So
called secured credit.
this is ways to work on your credit if you're planning to purchase a
That,
home.
and then the other thing, let's talk about the negative. Obviously, late payments or hurt you. Going over your credit limit. Like, for example, this person I talked about earlier, $500 limit, I believe he owes $522.
Oh.
So that's $22 probably drops his credit score 100 points.
So
that's why he's only like at 612.
Okay.
Because he's $22 over his limit. So I would take him as to make a $50 payment to get under that $500, and his credit score goes up. Now, if he gets under 30%, $150, it's drastically going to go up because now he's under 30%. So it would only take him $350 to get under that $150,
And that'll push his points way
and
up.
that'll push his points way up.
Good examples, Larry.
Right.
Now, we're talking about how to build credit, how to, not
So
be
now
late
how
on
you
our
mess
payments.
up your credit. Now here's another thing that we always look at when you go to and I'm going to use them as an example. Maybe I shouldn't, or what? Car dealerships.
Okay.
Co-signers.
Yeah, we've heard of those.
Right?
I see that all the time here in the insurance
Co-signer.
business. Yeah.
People come and they're like, "Oh, you have a car payment?" No, I don't have. Oh, yeah, I have one car payment. Okay, and then we run the credit like, "Oh, what's this card?" Oh, that's not my card. I'm like, "No, I just, I co-signed for my brother," or they wanted a reference, and usually that's kind of they trick them. Oh, we need somebody to, and more in the Hispanic or the community where I'm not gonna say they get tricked, but
No, I mean, I've seen
they
that.
get fandangled into
I've seen people that
Oh, it
co-sign.
doesn't affect you. It doesn't affect you.
Yeah.
This is just in case. Well, you know what? There is no just in case. If you're a co-signer, you are the owner. Just remember that. So if you co-sign for a car, a house, or anything, you are the owner. There is no, just in case he doesn't pay. or just in case she doesn't pay. No, there is no just in case. You are the owner.
So that loan transfers completely.
No, it doesn't
to you.
transfer. It comes up in your credit report. It is your loan.
Okay. So if they're late, it's going to hurt you.
They're late. They're going to hurt you.
That amount of
the
debt.
payment, it's going to hurt you.
Okay. It's going to count
It's going to count as your debt.
as your debt.
And now there's ways around it. You have to prove for 12 months that you don't make the payment. So that person has to make it out of their account, not cash or not walk into the bank. So there are ways around it, right?
So
but
basically-
it is more steps and it is more paperwork. It's not that it's more work for me. It's more work for you because you're the one that has to chase it, and you're the one that has to make sure they made it out of their account through bill pay, and they didn't happen to walk into the bank and made that cash payment because
So
anybody could have made it.
You have to prove for that loan to not show up on your report.
No, it'll show up, but for us lenders not to count it
Okay.
as a debt.
There's got to
We
be
could
proof
exclude
that
this.
that original person you co-signed for, that
Makes the payment.
girlfriend, that boyfriend, whatever
Brother,
you did.
sister, mom, dad,
They have to
son.
pay it out of their account for an entire year
For an entire
for the lender not to count it.
For the lender, for the bank.
That loan amount, that
loan- but it's still
Hyundai
your-
you co-signed
But it's
on.
still,
or-
it's still in your credit. It's
Yeah.
still your loan.
Okay.
Right?
Yeah, it makes sense. And we see that a lot. Like I said, we see grandparents co-sign for their grandkids.
Yeah.
And, you know, it affects them not only on the loan side.
I mean,
you know-
I remember the past. I've had co-signer before, and I've co-signed. I know. I try not to do it anymore.
Yeah, I was
but
going to say, yeah.
It's been a while.
Yeah, good job there, Larry. We're going to continue with this conversation, Larry, about credit. I think we got another episode where we can talk more about this credit stuff
Yeah,
that's
we just
going
touched
on.
the basics right here or anything, but you have any questions? Where can they contact?
Just hit up Larry. Larry, guys, Larry Navarrete with Loan Suite Mortgage.
Loan Suite Mortgage.
You got to throw your number out there, Larry?
NMLS 670362. And my phone number is 928-785-2451. Once again, Larry Navarrete with Loan Suite Mortgage, 928-785-2451. Thank you very much and hope to hear from you soon.
Hey guys, and if you need help with working on your credit, or if you have
working on your
questions
credit.
about credit, just hit Larry up. We're gonna have his contact information somewhere on here, email address and everything, or send me a message and I'll get you guys right over to Larry. Once again, Larry promising the best rates.
Yep, I'm promising the best rates.
He-
I'm not going to tell you I can guarantee you the best rate because there's no such thing as I guarantee you the best rate. But on every day, if you shop me with somebody else, I will get you a better rate.
Wow, go see Cal. Oh no, that was
No,
a car.
that was Cal Worthington.
Cal
There was
Worthington.
actually a thing about it. I don't know if he passed away or something.
Yeah.
It was. I seen it on social media. The Cal Worthington Chevrolet or
I don't even know if he's around anymore, Larry. But don't go see Cal. Go
No,
see
go
Larry.
see Larry.
All right. See you guys next week.
Really, I did see Cal Worthington.
Yeah, I saw that.
Go see Cal.
I'm gonna not be cheap. Oh, we're gonna put the cow thing when we say that shit.